The syllabus of Unit 1 is as follows. Indian banking system, structure and organization of bank, Reserve Bank of India, Apex banking institution, commercial banks, regional rural banks, cooperative banks and development banks. The books for the references are Basu A.K. Fundamentals of Banking, Theory and Practice, A. Mukherjee and Co. Calcutta 2009. The learning objectives are to gain knowledge about the Indian banking system and structure, to understand about the Apex banking institution. Since we have discussed the syllabus and learning objective, let's move on to the main content. So before we get to know about the Indian banking system, let's see the definition of banking. Banking Regulation Act of India 1949 defines banking as accepting for the purpose of lending or of investment of deposits of money from the public, repayable on demand or otherwise, or withdrawable by check, draft order or otherwise. So this is the definition which is given by Banking Regulation Act. The Reserve Bank of India Act 1934 and the Banking Regulation Act 1949 governs the banking operations in India. Banking is nothing but an industry that handles the cash, credit and other financial transactions for individual consumers and businesses alike. So next we are moving on to the structure of banks in India. So as we all know, the head of all the banks is RBI, that is Reserve Bank of India, which is also called as the Apex institution. So under that it has been classified as scheduled banks, non-scheduled banks and development banks. So under scheduled banks there are two types, that is commercial banks and cooperative banks. Commercial banks is further classified, as we all know, as public sector, private sector, regional rural banks and foreign banks. So all these things will be detailedly explained in the further coming slides. So the broad classification of banks in India, the first one is the RBI, that is also called as the Apex banking institution. So Reserve Bank of India is the central bank of India, as we all know. So it was established on 1st April 1935 by the RBI Act 1934. So it is a statutory body. Initially, the ownership of almost all the share capital was in the hands of non-government shareholders. So in order to prevent the centralization of shares in few hands, the RBI was nationalized on January 1st, 1949. So the functions of RBI are as follows. First, it acts as the monetary authority. The main function of RBI is formulating, implementing the monetary policies of India. Creating a balance between price stability and future economic growth is the main challenge of RBI as a monetary authority. The next one is regulator and supervisor of financial systems. So RBI sets the rule and regulations under which the Indian banks and financial system must operate. So the idea is to run the banks and the financial system so efficiently that the public trust on the system is maintained. When the people feel confident about the financial system, it's a win for RBI. So the next one is manager of foreign exchange. So as we all know, the foreign currencies flow in India through FEMA, that is Foreign Exchange Management Act. So it is the RBI which ensures that the transaction happens as per the FEMA. The next important function of RBI is issuer of currency. So it is in the responsibility of the RBI to print and issue new currency notes in India. It is also the RBI's responsibility to exchange old or damaged notes for the new ones. The next one is regulator and supervisor of payment and settlement systems. In India, all the payments must be settled as per the PSS Act, that is Payment and Settlements Act 2007. So it is RBI who ensures the transaction happens as per the PSS. In India, there are several payment systems like ECS, credit card, debit card, RTGS, NEFT, IMPS and UPI. All these payment systems are covered by this PSS Act, that is Payment and Settlement System. The next important function which is performed by RBI is as banker to government. So this RBI acts as a banker to government. Like retail and commercial bank gives services to common public, RBI is the retail bank for the government of India. RBI also acts as a merchant banker for the government of India. So it not only performs the function of a banker but also a merchant banker. The next one is banker to banks. So we all know this already. All the banks in India maintains an account with an RBI, right? So it is to keep their statutory reserve and other deposits. So hence this way what happens is that RBI also functions as a banker to the banks. It is the RBI's responsibility to ensure interbank transactions, and our RBI also lends money to the bank as a special case. So RBI is called as the lender of last resort. So the next important classification is public sector bank. So public sector bank are a major type of bank in India where a majority stake, that is more than 50%, is being held by the government. On 30th August 2019, Union Finance Minister Nirmala Sitharaman announced merger of 6 public sector banks with 4 better performing anchor banks in order to streamline their operations and size. 2 banks were amalgamated. Amalgamated means to merge to strengthen the national presence, and 4 were amalgamated to strengthen the regional focuses. Subsequently, the number of the public sector bank has been reduced to 12 from 27. Jammu and Kashmir Bank is also a bank owned by the Government of India. This new amalgamation came effective from 1st April 2020. So some of the examples are given in the image as you can see it. The next is private sector bank. So private sector banks refers to those banks where the majority of the stake is being maintained by the private individuals. So examples of private sector banks are ICICI Bank, HDFC Bank, IndusInd Bank and Axis Bank. Currently, there are 19 private banks in India as of 27 November 2020. So the next important classification is regional rural banks. So regional rural banks are the government-owned scheduled commercial banks of India that operate at regional level in different states of India. So these banks are under the ownership of Ministry of Finance, Government of India. They were created to serve the rural areas with a basic banking and financial service. So an example of RRB in India is Arunachal Pradesh Rural Bank. As of now, there are 43 RRBs in India. The next classification is foreign banks. So foreign bank is a type of international bank that is obligated to follow the regulations of both the home and the host countries. Foreign banks are present in India either as the representative offices or as branches. A bank may choose to open foreign bank branches to meet the needs of multinational and corporate customers. An example of foreign bank in India is Citibank. So the next classification is cooperative banks. So cooperative bank is a small-sized financial entity where its members are the owners and the customers of the bank. So they are regulated by the Reserve Bank of India and are registered under the States Cooperative Societies Act. The cooperative society banks have been recently in news after the RBI's restrictions on one of the leading banks where they have denied any kind of money withdrawal. This incident is of the Punjab and Maharashtra Cooperative Bank, that is PMC, which has raised questions over the reliability of such financial entities. So these cooperative banks can be further classified as rural cooperative credit institutions and urban cooperative credit institutions. Rural cooperative credit institutions can be classified as short-term structure and long-term structure. In short-term structure, the short-term financial needs of agriculturists have been catered. So there are 3-tier federal structure under that. That is, at the apex, there is a state cooperative bank in each state. At the district level, there are central cooperative banks. At the village level, there are primary agricultural credit societies. So long-term agricultural credit is being provided by the land development banks. So under long-term also, there are state cooperative agricultural and rural development banks as well as primary cooperative agricultural and rural development banks. The next classification is development banks. So the development banks are those which have been set up mainly to provide infrastructural facilities for the industrial growth of the country. They provide financial assistance for both public and private sector industries. Working capital requirements are provided by commercial banks, indigenous bankers, cooperative banks, money lenders, etc. The long-term requirements of the business concerns are provided by the industrial banks and the various long-term lending institutions which are created by the government. So in India, these long-term lending institutions are collectively referred as the development banks. Some of the examples are Industrial Financial Corporations of India, that is IFCI, Industrial Development of India, that is IDBI, Industrial Investment Bank of India, IIBI, Small Industries Development Bank of India, SIDBI, National Bank for Agriculture and Rural Development, NABARD, Export-Import Bank of India. So these are some of the examples of development banks. Moving on to the functions of development banks. So the first function is fostering industrial growth. Development banks expedite the completion of industrial projects and foster the social and economic development. The main role of the development banks is to contribute to the economic growth through participation in development projects. Development banks also provide long-term assistance, which is the second function. Development banks are among the mostly wide used instruments of funding and assistance for the projects that require long-term maturity. This organization offers funding and advice to projects that might not have access to commercial banks, as they do not necessarily provide adequate returns rate in short term, or because of long capital market imperfections. So the next function is balanced development. So these development banks in India have been primarily guided by priorities as spelled out in 5-year plans. This is reflected in the lending portfolio as well as the pattern of the financial assistance of development financial institutions under different schemes of financing. So institutional finance to projects in backward areas is extended on the concessional terms, such as lower interest rate, longer moratorium period, extended repayment schedule, and relaxed norms in respect of the promoter's contribution as well as the debt equity ratio. So this balanced development is being also promoted by this development banks. The next function is providing promotional services. Development banks in India have also achieved a remarkable success in creating new entrepreneurs and also spreading the industrial culture to newer areas and weaker sections of the society. The fifth function is infrastructure building. The fifth function is infrastructure building. So the basic purpose of the development banks was, particularly in context of a developing economy, was to accelerate the pace of economic development, that is the speed of economic development, by increasing capital formation, inducing the investors and entrepreneurs, sealing the leakages of materials and human resources by carefully allocating thereof, undertaking development activities including promotion of industrial units to fill the gaps in the industrial structure, and also by ensuring that no healthy projects suffer for want of finance or technical services. So they generated the venture capitalist also. The sixth function is entrepreneur development. So development banks in India have also achieved a remarkable success. As we already saw, it has created a new class of entrepreneurs also. The seventh function is fulfilling socio-economic objectives. The Association of Institutions in the Management of Corporate Bodies has considerably facilitated the process of progressive professionalism of the corporate management. So institutions have been able to convince the corporate managements to appropriately reorient their organizational structure, personal policies, and planning and control system. Okay, so these are the functions of development banks. So the next branch or the next classification is commercial banks. So commercial bank is a kind of financial institution that carries all the operations which is related to deposit and withdrawal of money for the general public. It also provides loan for the investment and also performs many other such activities. So these banks are mainly focused on profit and they do business only to make profit. So commercial banks, you can see here, it comprises the public sector banks, foreign banks and private sector banks. So in the image, you can see some of the commercial banks. Moving on to the functions of commercial banks, the basic role of a commercial bank is to provide financial service to the general public, businesses and companies. Banks also ensure economic stability and sustainable growth of a country's economy. So a commercial bank performs the following functions such as accepting deposits. So accepting deposit is one of the oldest function of a commercial bank. When banks started, they charged a commission for keeping money on behalf of the public. With the changes in the banking industry, what happened was, over the years, and the profitability of the business also changed it, bank now pays a small amount of interest to the depositors who keep money with them. So it became vice versa. However, the depositors also incur administrative fees to maintain their accounts. Bank accepts 3 types of deposits. The first one is fixed deposit account. So here what happens is that the customers who have money that they do not need for the next 6 months or more can save in their fixed account. The rate of interest paid increases with the length of the fixed deposits. The second type is saving bank deposits. It is for the small savers who are paid interest on their accounts. They can withdraw their money up to a limited amount by writing a check. The third type is current account for people in the business who can withdraw their money at any time without any notice. So banks do not typically pay interest on deposits held in the current account. Instead, what happens is that the account holders are charged a nominal fee for the service rendered. The next function is advancing of loans. So advancing loan is an essential function of banks since it accounts for the highest percentage of revenue earned annually. Bank mostly offers short-term and medium-term loans for a percentage of the cash deposit at a higher interest rate. So they do not provide long-term financing due to the need to maintain the liquidity of assets. So one kind of loan which is provided by the banks is cash credit. So it is nothing but an arrangement between the bank and a client. It allows the client to withdraw money beyond their account limit. So other things are like call loans, overdraft facilities. Overdraft facility is a form of financing that allows the current account holders to overdraw their account up to a specified limit. Then bill discounting. Bill discounting is a bill of exchange by providing money immediately to the holder of the bill. The bank deposits the money in the holder's current account after deducting an interest rate for the loan period. Once the bill of exchange matures, what happens? The bank gets its payment from the banker of the bill holder. Okay, so these are the types of loan which is being given by the commercial banks. And then it also performs agency functions. Commercial banks serves as agent for their customers by helping them in collecting and paying checks, dividend, interest warrants, bills of exchange. Also, they pay insurance premium, utility bills, rent and other charges on behalf of their clients. So you can see here some of the agency functions are collecting receipts, making payments, buying and selling securities, trustee and executor. The other functions which are performed are general utility functions, such as issuing letters of credit, traveler's check, underwriting shares and debentures, safety custody of valuables, providing ATM and credit card facilities, providing credit information. So these are apart from the main functions, they also perform these. Okay, so they provide foreign exchange to the client in their export and import business by selling and buying the foreign currency. However, banks must get permission from the regulatory body, that is mainly the central bank RBI, before dealing with these foreign exchanges. So a commercial bank also acts as a custodian of the precious stones and other valuables also. They provide customers with lockers where they can put their jewelry, precious metals and crucial documents. Such items are more secure when stored at a bank than keeping at home. That is what the normal people think. So where they may get stolen or damaged. So that is better. So the commercial bank offers all such functions to the general public. We have come to the summary session. We have discussed about the meaning of banking and its structure, Reserve Bank of India and its functions, public, private sector, regional, rural and foreign banks. We also discussed about the cooperative banks and its classification, and we moved on to the development banks and its functions. Now we saw the commercial bank and its functions. The references for the further reading are a YouTube link is being given for your further reference, and De Kock Central Banking, Cross by Lockwood Staples, London. This book can also be referred.